to an investor looking for premium market opportunities. Presenting premium and exclusive service for investors by Kalkine.
Hello, I'm Rachel and this is Kalkine's Daily Trending Economic News. The continued fallout from the Russian invasion of Ukraine and the strength of the US dollar has helped deliver an estimated record $460 billion in earnings for Australian exports of resource and energy commodities in 2022 to 2023. But resources earnings are expected to fall over the next 2 years after 2 years of record earnings. Export earnings are forecast to fall $390 billion from this year to next, and then $344 billion in 2024 to 2025, as energy prices go back toward levels traded prior to the Russian invasion of Ukraine. The outlook is broadly unchanged from the March 2023 Resources and Energy Quarterly. Australian energy export earnings are set to fall noticeably. LNG earnings are forecast to fall by $24 billion to $68 billion this year and next, as LNG prices ease from the record high levels they reached in 2022. A further fall of $8 billion is forecast for next year. Thermal coal exports are also forecast to drop sharply, down from $64 billion in 2022 to 2023 to around $38 billion in 2023 to 2024 and $30 billion in 2024 to 2025. Now, exports of metals used heavily in the energy transition are expected to remain over $40 billion, having doubled since 2021 to 2022. Slower world economic growth and improving supply conditions are driving most commodity prices lower. Tighter monetary policies causing a slowdown in economic growth in major Western economies where labour markets have been tight. Falling energy prices will take some of the pressure off central banks to keep tightening monetary policy. The Chinese economy is slowly gathering pace with the end of COVID lockdowns. The savings buffer built by Chinese households during the pandemic is estimated to have been much smaller than those built in Western economies. This suggests that the recovery will be relatively less robust than seen elsewhere, but also less likely to lead to a rise in inflation as experienced in Western economies. Transport and infrastructure constraints remain a huge obstacle to the full diversion of Russian energy exports to nations with no sanctions. The net result is a fall in world energy supply as some Russian output is stranded. Well, that's the latest from Kalkine's Economic News. I'm Rachel, signing off for now.